Like many of you, I used to struggle with the ICT, but that finally changes today. Today, I'm giving you the one strategy which turned me from a nobody to currently a 5-figure trader. With this strategy, you don't need order blocks, you don't need breakers, or you don't need anything else confusing. We are using displacement and fair value gaps at a key time. This one model took me from zero to finally being funded, and it can do so for you too. So without wasting any time, let's get started here. So you might be asking, Loz, what are exactly we looking for here? Well, I will tell you right now, we're looking for trades in the final hour of trading. So what time is that? Well, we're obviously working with the New York Kill Zone, New York timing, I should say, not Kill Zone. We are using 8 p.m. New York to about 9:15 p.m. New York. This is our key time, okay? Once we've established a bias on, say, the 1 hour chart, or the 4 hour chart, or even the 30-minute chart, we drop down into the 1 minute, and between these time frames, we're looking for displacement with a fair value gap. Yes, it is really that simple, okay? So we have worked out a bearish bias in this scenario, okay? And if you look at the price action here, we've had a huge run up. This is a market maker sell model. Because we are meant to be going down here, because our higher time frame bias says so, we can take this range from the low, drag it out up to the high. Now notice that inside of this dealing range, from here to here, we have a nice actual gap inside here. So if I drag this out in time, this is what we can be aiming for, because we want logical targets for our trades, okay? So what do we wait for? We wait for 8 p.m., okay? Now 8 p.m. should give us runs to liquidity, strong runs to liquidity as well. What we have is 8 p.m. open up and we start consolidating. Price then displaces. This is what we're looking for. Do you notice how we displace and create a fair value gap inside here? That is exactly what we're waiting for. Now, you may be wondering, yes, but we also run above the fair value gap. And this is our time window. But then we hit the target over here. Yes, but as long as the fair value gap is created in here and we don't hit it, say, 9:45, as long as we hit it inside this hour, we can take this sell, have your stop loss above the swing high before we displaced, which is this, okay? You take the sell here and target a nice 1 to 2, okay? We eventually hit the target down here. Target a nice 1 to 2 into the start of this actual gap. And then you run away with your profit. So all we're looking for is that a simple scalping outline, scalping framework, this displacement, a fair value gap, and then an entry. It really can be that simple, okay? So let's look at some more examples of exactly what I'm talking about on NQ. Let's go to 8 p.m, okay? 8 p.m. is over here this time. 8 p.m. opens up here, and remember what we're looking for, all the way to 9:15. We are looking for displacement and a gap. You can see here, okay? We have been running down all day and we came into a discount of this swing, okay? We came into a discount at this point. So when we're trading here and we start to consolidate, remember we're waiting for displacement. We don't get much displacement. Does this bit of price action look like there's any displacement in there to you? To me, it doesn't. We have displacement there, but we already hit our key level, which is an equilibrium of this price swing, okay? You can see we come into equilibrium there. So because we've already hit our key level, we don't take this fair value gap as a sell because we've ran into the key level. So the logic has changed. We've ran into a key level. We've got an original consolidation, distribution, smart money reversal, and now we can start looking for buys because we're still inside that final hour of trading. So we follow the rules. What are we waiting for? Displacement, okay? Look at this here. We get strong candles up, have some displacement in here. If you took that, that's an easy buy, okay? If you didn't take that, once we displace here, we're still inside this mini kill zone, okay? This is so strong and powerful. Once you're on the right side of the market with this final hour of trading, one displacement fair value gap can give you a huge run into liquidity. Okay, it is really that powerful. If you don't believe me, go into your own charts and check this out. Displacement up, fair value gap lines up with a mitigation block. We then run higher above where all the sell side liquidity up here. Okay, let's say you missed that first entry. This would be your trade, an easy 1 to 2.8. Do you see how easy scalping 1 to 2s are? 1 to 2.8. They appear all the time in this final hour of trading. All you've got to do is outline a bit of logic with the Nasdaq or the S&P. This is where this works best. You can even look for S&T divergences between the two, and that makes it even more powerful. Okay, so just make sure there's a little bit of logic behind it. Like this here. This one, if you remember, we took this price swing, came into equilibrium, then we expanded. Okay, that's the logic you need behind it. Once you have logic behind it, you will see these final hours really do expand and they run quickly. You can really be caught off guard with how quick this stuff can run. Okay, so let's dive over and try look for another example over here. I'm gonna look for some proper framework to try trade this final hour in. When we're looking for proper framework, okay? And we're not looking for no little moves, or we're not looking for price to sort of lag around. We need some framework to work within. So let's dive into this bit of price action over here and see if we can find a trade within this. Now, this is very choppy, but I guarantee we can still find a trade somewhere, okay? Right, choppy price action. Nevertheless, you can see we have a dealing range. On the short term, we have a dealing range. This should be reversed. So if I reverse this for you all so it's easy to understand, premium discount. We come into equilibrium during the final hour. Remember, it's 8 p.m. to 9:15. This should be pushed back. 8 p.m. to 9:15. In the final hour, we run into a premium array. Okay, we run into a premium array, and it is in the form of fair value gaps. All these fair value gaps. This will be a fair value gap on, say, the 3-minute or the 4-minute. We run into this. We then leave liquidity. Look at this. We have a low, a higher low. Okay. These become relative equal lows. They're not directly equal lows. They don't have to be directly equal lows, but they're relatively equal, which is hence the name. So, original consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, distribution, redistribution. We run below the original consolidation. This is a market maker sell model. Remember what our sell models are like. We have an original consolidation in green. We then have a level of accumulation, okay, which I'll make blue. We then have another level of accumulation. We then have a smart money reversal, which is usually referred to as the turtle soup. You do not need to catch that because it's really hard to catch, okay? We don't trade that. We then have low risk sell, distribution, and then the final level of distribution runs below the original consolidation, clearing out all the sell side liquidity from below here. This is the framework on any time frame. In this case, we're using it for the 1 minute time frame during this one specific hour. It is so powerful during this hour. Obviously, just reverse it for market maker buy models. It would be the reverse of this. But we have an original consolidation, which is building up liquidity. Remember, retail traders, as it's running up here, where are their stop losses? Their stop losses, they're going like this, okay? They are taking longs inside of here, taking longs constantly with massive targets, and their stop losses are below lows because they think that's support. As we all know, that is not support. We are going to be targeting them stop losses. So we know there's resting liquidity here because that's where they have their stops. Short sellers also like to be selling below lows. So where are their market orders? Here, below old lows. So there's lots of resting orders below this. This is all accumulation. We're building up these resting orders because retail are buying as we run up. They get FOMO. A lot of you still suffer from this. FOMO. Do you see how it contributes to the market paradigms? FOMO, they buy. FOMO, they buy. FOMO, they buy. Stop losses below here, below here, below here. So every distribution cycle, we're running below stop losses. We're taking people out the market. And when we get to this final distribution stage, we take out the original consolidation. We take out the bulk of the market. Okay, so that is what we're looking for. Heading back over here, you can see we've got the same scenario. That's a consolidation. Stop losses are below here. So once we trade up into this and we displace, remember displacement is key because this is the algorithm flashing to you. Displacement is the algorithm telling you, I want to go somewhere, follow me. That's literally what it is. Quote that. I want to go somewhere, follow me. That's what displacement is. So when we get displacement like this and we create our fair value gap, what do you think you're going to do? You're going to sell. This is exactly what I've been teaching you. During the final hour, stop loss here, easy 1 to 1.3. They don't have to be huge trades. They have to be good trades. Easy 1 to 1.3, outlining logic and narrative. That's all it is. That's all this little model takes. Now you can get funded with this model. This is actually the model that first got me my payout. My first payout came from trading the final hour. It is that powerful. Once you get it right, we can run to liquidity really fast. And it's usually a market maker model on the 1 minute, sorry. When my first funded account was a 50k account, okay, I ran it up to 11% and withdrew those profits from this, okay? You can find tweets about it. I've tweeted about it before over on Loz Trades, at Loz Trades on Twitter. I've tweeted about this before. This is the one model that got me a 50k. I ran it up 11%, $5,000 payout. That was huge to me at the time, just trading this model. Having the discipline to wait for it to form. Having the discipline to skip New York and realizing that this is all I need. That's all you have to do, okay? So let's dive into a few more examples and then that should be enough for this video. Now, if we look for some nice logic again, some nice expanding hours, I want to show you more examples of this. A tip to finding the best trades with this is the idea that consolidation leads to expansion. Okay, so if let's say New York AM session, which is 8:30 a.m. to about 11:30 a.m. Right. This model works best when that is a consolidation. So when that is sort of going sideways, okay, that is when 8 p.m. Let's say this was 8 p.m. That is when 8 p.m. Let's say it was here. That's when it can expand. Because it's the same concept. We're building liquidity during an AM session. The next session manipulates and then expands. It's AMD. Accumulation, manipulation, distribution. So when the AM session is consolidating a low probability, we have no news or something like that, that is when it's best to trade. Okay, so diving into this bit of price action here. This final hour of trading. Do we get a run higher? Do we get displacement? Okay, so we have the final hour of trading. Now I want to show you this example because it's not the best price action, but I'm sure we can still pull something away from it. So what do we get here? Well, we've been consolidating and we manipulated just before the final hour opened up. We then expanded higher and traded, retraced into, what's this? A fair value gap. Okay, this is still a fair value gap inside the final hour. If you long this, put your stop loss below this swing low, that's another 1 to 2. It is that simple. Even on days where it's not the best, you can see this quite clearly still works. If the other session was consolidating, this works even better. You can get huge runs into the final hour of trading. ICT speaks about this. He's spoken about it in the 2023 mentorship a lot, but I feel like it's still being slept on. And today I wanted to bring it to your attention to finally stop this from being slept on, because some of you need to realize you need to do less in order to get more. This, as surprising as it is doing less. Some of you sit there for 6 hours a day trying to trade. You trade London and New York for no reason, when you could be waiting for conditions to appear, the right conditions to appear, to finally just trade this final hour. You have to be at the chart from 8 p.m. New York to 9:15, not even 9:15. You can be out by 7:30. Some of you have to realize this game requires less to get more sometimes. Okay? You've seen these 3 examples. I looked at these randomly. Okay? You've seen how easy this can be. Remember what we're looking for. We're looking for accumulation, as simple as that is, manipulation, distribution. But what does this distribution look like? You know what it looks like, because this is a consolidation. We then have accumulation levels in here. I should really make these different colors. So let's do that. We have accumulation levels where people are longing. You have to understand that people are longing inside here. Okay, and this is accumulation. The stop losses are going below this. Guess what we do at the top? We finally reverse. And then you know the rest, okay? All of this selling is a sell model. How does a sell model look? We have a low risk sell, which is the first one. We then have a distribution, and we have a second distribution, which finally runs out the original consolidation. Now, where do these line up? They line up with the other distribution levels, okay? Let me make this depiction a bit clearer so I can explain this better to you. Okay, this is our smart money reversal accumulation level. These accumulation levels, right? And this is some real source, so get your notepads out. I don't teach this a lot. I don't like to talk about this a lot. This is the stuff that works. People don't like to talk about this loads because this is actually what works. This is actually what makes money. If we extended out the accumulation levels, you would see that these areas are where the new distribution levels, let's make it yellow for example, this is where the new distribution levels form. Here, inside the old accumulation levels. Because we were using order blocks in here for buying, these previous bullish order blocks that rest inside these areas of buying, extend them out in time. These lines here. Once we extend them out in time, we can anticipate fair value gaps, breakers, order blocks on the other side of the curve. So bearish order blocks, bearish breakers, bearish fair value gaps. This is where we can anticipate them to form. Old accumulation levels flipped and turned into new selling opportunities. 3 stages. Low risk sell, first distribution, and second redistribution. That is the gold. That's all I'm looking for when I take a trade. On any time frame, on the hourly, the 4 hour, the daily, the weekly, it doesn't matter. These redistribution levels and reaccumulation levels, if we're looking at a buy model, these are so powerful. And this is what we need. Okay? So when you're trading the final hour, think about this. Think about these concepts and think about how you can apply them in a more simple way, in a more peaceful way that gives you peace of mind. You can do this too. Okay? This isn't rocket science. You need to simplify your trading so you can finally succeed. Put down all the hard concepts. Put away COT data. Put away all these different things you don't need. Put away quarterly theory, quarterly cycles, whatever they're called. I don't conscribe to that. I don't believe in that. Okay? I don't trade that. It doesn't work for me. I've never tried it. I've heard people bash about it. That is not what we do over here. We simplify these concepts, okay? We don't make them harder. They don't need to be hard, okay? Your psychology needs to be hard. Your psychology needs to be worked on. The concepts are simple. Applying them is simple. The psychology is where people go wrong. So with that being said, I won't ramble on any longer. I hope you did enjoy the video, and if you did, please drop a like and drop a comment. Subscribe if you are new and you enjoy this sort of content. If you want to check out the links to my socials and my mentorship, they are below in the top line of the description. I'm always active on social, so if you have any messages, reach out to me over there. Thank you as always for watching, and I will catch you in the next video.